Welcome to our weekend Forex forecast. My name is Jay Norris. As always, we need to remind you trading futures and Forex is a risky endeavor and not suitable for all investors. Charts we're going to be looking at are real-time market snapshots and may not be replicated going forward. I'm a 20-year trading floor veteran of the Chicago Board of Trade. I'm also the founder of Trading University. I've written a couple of books on trading, which were published by McGraw-Hill and serve as the textbooks for our courses at Trading University. Let's get to the charts. Here's your daily Australian dollar chart. Big update in the Aussie again Friday. You can see I have some lines on the chart there. Let's clear those out. You know, the bottom line is that it was a nice big up move. On the other hand, you can still see what we call that number 3. That's our day-to-day pattern. Your day-to-day pattern is still lower. As long as you're below that resistance level right there, the day-to-day is still lower. You know, for the longest time, I guess you could have called me a perma bull on the Aussie. And, you know, it's still a great trading vehicle. I think it's a market that you can count on. When you get good dips into support, you always have to take a look at that. Because it has that big yield, and where else can you buy a dip and get in there and catch a nice big swing trade and then get paid the yield along with it. So I don't think that has changed, but a little bit discerning that this market hasn't made a higher high in some time. In fact, it hasn't made a higher high since going back to 2011. So it's a market that, from my perspective, it'll always be in play on the upside, so to speak, if you can buy a dip. Now, it's had a pretty good rally the last 2 days, but again, it's below that significant resistance level. I'm not so enamored with it at these levels on the upside. It's a great trading vehicle. On the other hand, I'm not writing it off. You could see that you're down on that day to day. So the market's probably balanced up a little bit now, and I think you'll see both sides of it. Great long-term investment vehicle though to accumulate on dips. Let's take a look at Aussie yen, and here's why I'm really not as enamored with the Aussie pairs of late. We could see in the summer you had that low volume short covering rally, whatever you want to call it, correction, dog day rally, whatever. It couldn't eclipse that secondary pattern line right there. It couldn't get beyond the normal retracement level. So we have to assume that long-term secondary pattern is still down. Now you look and you can see I've got my day-to-day is marked down also. My day-to-day, generally we're going to call that number 3 just to keep it simple. So your third pattern, pretty important pattern, that's down. So this is what we call balance market. See your primary's up, secondary's down, short-term secondary up, but that day-to-day is down. So you're in a balanced market. That's essentially a counter-trending market. It's a market we would expect to see both sides of the trade on, but it's no longer as bullish a scenario as it might have been had it taken out these levels. So I'm not so enamored with the Aussie yen on the upside, the Aussie pairs overall on the upside, as I had been based on pattern. There's no doubt about it that there's all kinds of press about the commodity boom that the growth of China created. The Aussies were a big benefactor of that, and that probably isn't going to be there anymore as China moves from institutional building now to individual consumption. We'll have to see how that goes, and that may not bode so well for Australia overall. However that shakes out, though, we focus on pattern, and Aussie yen, the pattern here is pretty neutral. It's telling us that this is a market that may not have as much upside as it has in the past when you look at some of these big rallies over the last couple of years. Next market, Euro US dollar. Well, this is a textbook short covering rally. We loved seeing it. It wasn't that difficult to see because once you had shifted that day-to-day pattern higher, really, and once you closed above these levels here, 1, 2, you had a couple closes above that significant retracement level. That shifted everything, and the market just kind of went sideways. It refused to correct. a sideways market following a rally, that's a bullish pattern, and you saw basically it put the market in a position to really drive those longer term shorts out of there, and you certainly had a lot of long term shorts in that market, so they were driven out of there. You may have a little bit more room on the upside, but overall this is a pretty bearish chart, and this is what fascinates me. For all the talk of the surprise move following the ECB decision and all the talk of how bearish this market was, and when you put all that to rest and you just look at the daily chart like we're looking at now, you see, well, that's just a normal rally. That's a normal bear market rally. It's certainly no bigger than rallies that we have seen in the past, price-wise and time-wise. So there you have it. It's I don't think it's the end of a bear move by any means. I think it's just another bear market rally. If it were to get above that green line, you get out above 28.75 or so, we'll have to reevaluate. But for now, I think we would look for sell setups just ahead, or even really right where it's at right now. Euro yen. Euro yen, it gives it kind of gives that deception that there's a little bit more room on the upside here than perhaps there is. I mean, you could get it as far as 102. Now, I don't know how that might come about, though. I don't see the euro going that much further. You could see the last couple of days' gains were based, really, the last day's gains based entirely on the euro, not necessarily the yen. Now, what might give this market some upside impetus maybe a month or two down the road would be a weakening of the yen. So this is a market where it benefited from a strong euro. Well, this is a market that benefited from the strong euro primarily this week, but next month it could benefit from a weaker yen. So we'll have to see. There may be some more room on the upside in dollar yen. There may be some more room on the upside in euro yen, but I don't see it coming right away. So I'm not so enamored with this chart. Granted, it looks like you have a little bit more room up there. I don't think you'll get that though right away. A correction is probably in order, and really this market's kind of on the back burner for us. Pound dollar, pretty good looking market from our perspective. Here's another one where you've got room on the upside. Now, I think the market will take that room on the upside. It may have to have a correction, though, so very definitely this would be a market that we'll keep an eye on, particularly the lower time frames. If we do get a correction, would love to see that correction. You'd see it took out that long-term trend line. We go back to a weekly chart. Look at that, all the way back to the high in 07. So I do think that there's probably room up to 170. You got to 170 following this dead cat bounce in 09. So I think there's room up above, and I think the pound is in a position to go for that, get some more upside in here. You got a lot of room left between now and the end of the year. So I think 170, 165 first, but I think 170 overall is probably doable for the pound. It needs to correct, though. We'd love to see it correct. The pound definitely something we'll keep an eye on. Pound yen, a disappointment, because the yen strengthened on Friday. This is a pair that I'm pretty excited about, but not yet. I think you could see a weakening of the pound, but I think you could see a weakening of the yen later in the year. There's a really good seasonal in mid-October for that yen to finally weaken. And I think with the pound dollar looking pretty good, pound dollar has room on the upside. Boy, if you can get that yen to weaken perhaps later in the year, then this pair would really be exciting on the upside, and you could see you have room to that trend line there. And if you break it out, the dead cat bounce in 09, that took the old dragon, we used to call it, when it had a yield to it and it used to move. But I think there's room all the way up to 160 should you clear that trend line. And what would do that would be a modest strength in the pound coupled with weakness in the yen. So this is not, this is something that we're going to watch longer term. There's nothing to do yet, but stay tuned for pound yen the further you get into the fall. mid-October, great seasonal in the yen, and I think with the pound strength we're seeing already, this could be a really good one. So we're gonna keep an eye on that. Here's the Kiwi, real nice rally in the Kiwi. We wrote about that. We'll post a couple times on Twitter about that, about this significant support line there. And support, it can give once. You can close below it once, but if you close below it twice, then that's going to be significant. And it was just a retracement of that level. So this overall move remained strong, and you had a heck of a move up in the Kiwi. So like the Kiwi, actually we can get rid of that resistance because you closed above it twice here. So this is a classic example of when you close a couple of times above resistance, look to buy that next dip, and that next dip was a good one. So Kiwi pretty strong. Kiwi pretty strong overall. Kiwi yen may be one to look at if you do get a dip in this guy later in the year. Not enamored with the Aussie yen, his cousin, but Kiwi yen is probably going to be one that we'll have to move to that front burner also. Looking good there. Dollar CAD, boy, this one's not even worth looking at. We've written this one off a while ago. Wow, look at that! It even took out, closed once below the April low. We wrote this market off right here, and we really had no more interest in it. We said maybe we'll take a look at it at the end of the quarter, and then I even pulled that and I said I don't think it's worth looking at. The reason it's not worth looking at, professional traders really don't want to short a market at historic levels. You're pretty cheap here historically, so it's hard to want to short it because there's not a whole lot of room in it, but you're not going to buy a market just because it's cheap. So dollar CAD, not a whole lot to look at for us right now. Dollar Chief, the Swissy, really you were coming up dollar weakness all week, particularly later in the week last week. There you go. Pretty good support. I guess we've got a while. This may be something to move up on the burner. We'll keep an eye on 94 even here. 94 even potential support. You got a nice trend line there too. So, if you get if the euro tops out, which I think it could, the euro being 60% of the dollar index itself. So if the euro tops by default, the dollar's going to bottom. This may be something to watch for with that euro topping out, and take your pick. Pretty much the same trade, long dollar chief or short euro US dollar. So this could be one to watch right here. Yen itself, the dollar yen always confuses me. I don't know what to make of it. I really don't. The secondary pattern, I could tell you, is down. On the other hand, I guess I don't know what to make of this move, essentially. I don't know how to qualify or quantify that as anything. I think the primary's down, the secondary's down. I don't know what to call this big rally, but it has, that 764 continues to hold, so I guess we'll have to watch that. I think the closer you get into October, the further you get into the fall, the more possibility that you could see another short covering rally along these lines, and perhaps even a little bit more serious, perhaps that it'll have legs finally. We'll have to see. But if it continues to hold 78, we'll watch it. But again, it's I just think there's more interesting scenarios to be short that yen than in dollar yen. I like pound yen, Kiwi yen a little bit more. So we'll have to watch that. Now that the volume's starting picking up, we're getting out of the dog days. We will definitely be doing more than just the weekend reports. We'll be back doing the daily reports on Forex TV also. So stay tuned. My name is Jay Norris. I wrote the book Mastering the Currency Market and Mastering Trade Selection and Management, which serve as the textbooks for us at Trading University. Thank you so much.